Tesla here. Whoa! Me, Kevin, boy. You're making me itch. You're making me scratch. You're making me go crazy, Stepbro. Welcome back to Strongman Personal Finance. I heard the most ludicrous presentation from Meat Breath Kevin on Instagram, bro. And yes, you can see that tiny little picture of that strong, delicious man with the weight in his hand. That's my Instagram. You can sign up for my Instagram or not. I don't really give a crap. But we need to respond to Meet Kevin's little thing that he made talking about his private jet, bro. Because apparently the government bought his jet for him. Now, when people make videos like this, I think it's extremely toxic, okay? Number one, people think that, rich people, they just get these write-offs and they get screwed over and it's not fair and the middle class are paying the taxes for the rich people so they can fly around on their private jets and it's just a bunch of garbage. I'm going to vote Democrat. Well, guess what? Any ordinary and necessary business expense, if you have a business, not if you're a W-2 wagey, if you have a business, is deductible. Strongman Personal Finance is a business, and I can deduct, write off, basically everything that I have, especially when you have what's called bonus depreciation, which, by the way, is starting to phase out, starting, I think, in 2023. Yeah, it's going down. But Kevin just used a quote-unquote tax loophole or a tax cheat that anybody can do. And I can tell you, I work in tax, okay? I'm not like an expert in tax. I've just started working in it. I've been doing taxes for a year. But basically, any ordinary and necessary business expense, and you have a legitimate business that you have, you can deduct it. I mean, some things you have to capitalize. But we have these special rules, laws, special things that we throw in the tax code that allow you to immediately expense, deduct, depreciate, whatever you want to call it, capital assets. Me, Kevin, took advantage of this part of the tax code called that encompasses bonus depreciation, which in 2022 allowed you to write off 100% of the cost of certain assets placed into service. There's a lot of things that go into it. This isn't tax advice. If you really want to write off something, you should talk to your CPA. Make sure you actually have a business. But let's react to this video of Meet Kevin and his clownish advice or whatever he's doing, and I'll give you my thoughts. Meet Kevin here! Whoa!
I got the government to buy me a nearly $13 million private jet.
The government did not buy your jet.
And it cost me nothing for the first year. Listen to this. Thanks to Donald Trump and the 2017 Tax Cut and Jobs Act, if you buy a $12.8 million private jet and you owe about $5.2 million in taxes because you made about $12.8 million, the government says you could write off that $12.8 million jet and owe no money in federal income taxes.
Yes, on that specific business. If you have a business and you have $12.8 million on the top line, this is a very simple scenario, and then you place an asset into service that you are allowed to fully bonus depreciate in the year that you place it in service, yeah, you won't owe any taxes because the profit and loss of that business will show a zero bottom line profit, and that loss will theoretically, typically, flow through from your business to your personal tax return, depending on the type of business you have. When it comes to a C Corp, that's something different. But most businesses are pass-through entities where the profit and loss of the business is passed through to the individual shareholders or partners in that partnership, S corporation, et cetera, et cetera, et cetera. So what he's saying is, yeah, it's 100% true. If you have some revenue in the top line and then you take bonus depreciation, boom, your profit and loss is zero. The first thing that is misleading is that he's like, well, according to the Donald Trump Tax Cuts and Jobs Act, you can do this. Any asset that you place into service in a trade or business and you are able to actually deduct it, or depreciate it is a correct term, no matter the time frame, officially you will fully recover the cost of that asset. Some assets, you're only allowed to deduct over 5 years, depreciate over 5 years. Some assets, you can only depreciate over 7 years. The IRS specifies what these are. Some assets, you can depreciate over 15 years. Or you can take these special depreciation allowances. However, the only thing that the Trump's Tax Cuts and Jobs Act did was allow you to do special things to take or front load your depreciation. However, if he had this jet and he used it over its normal depreciable life, I don't know what it is off the top of my head, I don't really work with jets, he would have eventually depreciated and recognized the tax benefit of that depreciation over whatever useful life that the IRS has on their makers' tables. It's as simple as that, okay? The only thing the Tax Cuts and Jobs Act did was allow you to front load depreciation. And I can tell you, it isn't necessarily good to take all your depreciation in the current year. There's a lot of tax planning that goes into it. But sure, he went ahead and did this. This is typical. I have a computer that I place into service, okay, in my business, my Strongman Personal Finance business. And I took the depreciation. I depreciated the entire thing in the first year. I took, I think, Section 179, but you can do bonus depreciation. I bonus depreciated my computer, and I took all the deduction in the first year. Okay. I mean, I did that, or I could have spread it out over its life according to the maker's tables. Okay, this is not unusual. And the government is not buying your jet, Kevin.
That means after the down payment, the government bought me a private jet for an entire year by washing away my entire $5.2 million tax bill, putting a down payment on a plane for me, and paying for the first year of ownership completely for me.
Okay, here's the thing with taking all the depreciation in the first year. Do you get depreciation in the second year? The third year? The fourth year? No, you don't. You just change the timing of when you took the depreciation. So the government bought his plane in the first year, but in the second year, he's going to have literally no depreciation that he can take on that airplane because he already fully depreciated. Its basis is now zero. It's all about give and take. It's all about timing. There's nothing special, unique, or there's no trickery involved in this.
Thanks, 2017 Tax Cut and Jobs Act. I got the government to buy me an...
Okay, so that concludes the video. Look, the government did not buy his plane. If you go look at his breakdown, he got to save $5 million in taxes. Oh my God. But if you take his actual loan, which I have right here, that's his monthly payment times the number of payments, he's got to pay at minimum $17 million for this jet. So he was able to bonus depreciate it, take all the depreciation up front. Maybe that wasn't a great decision. I don't know. I don't know his tax situation. But I can tell you, he still has a net cash outflow of $17 million. Oh, and that doesn't even include operating costs. What? Yeah, because it actually costs
I got the government to buy...
Quiet, Kevin. It costs money to run the jet. Oh, and if you sell, and this guy's smart right here, if you sell the plane at a gain, all the gain that comes from depreciation, from your accumulated depreciation, gets recaptured as ordinary income. So all the taxes that he saved, his deductions that he saved, he's basically trapped in this plane because if he sells it at a gain, which he will because its depreciable basis, its adjusted basis is zero, he's going to owe tax at ordinary income tax rates, okay? The IRS giveth and the IRS taketh. And I'm just a noob tax guy. I've been doing this for a year, okay? But even I understand these basic concepts. The government did not buy his plane. He didn't take advantage of some special rule. I've literally done it with my freaking computer, okay? And there's lots of things that you can bonus depreciate, things you wouldn't possibly imagine. You could just write it all off, depreciate it in the first year. It's not special, and he's definitely paying way, way, way more than he saved in taxes. And when he sells a plane at some point at a gain, which he will because his basis is zero, he's going to owe taxes at ordinary income rates. So no, this video was not impressive, Kevin. And I think you're smart enough to know that, okay? I think you're smart enough. You're a smart guy, Kevin, okay? Don't post this crap on the internet. Have a wonderful night.